But Dipan, I just had one question for you on Happiest Minds, and I want to ask you that because we are heading into a conversation with the management in just minutes from now. You track this entire space. Do you like this stock?
Yeah, Sonia, actually we've been invested in Happiest Minds since listing and no complaints over there. It's one of the highest growing, fastest growing companies within the mid-cap space, but always been very expensive because of the management quality and because of the type of business and projects which they do. But keen to hear what they have to say, and maybe I can ask a question or two.
Oh, of course. I would love for you to join into the conversation as well, since you like this stock and you've tracked the stock for so long. But the topic in focus is that downward revision and guidance by global IT services player EPAM, which hurt all of the IT stocks a couple of days ago. Now, EPAM has said that clients have become even more cautious with spending and there is some reduction in the order pipeline. So to discuss more of the impact on this and on the sector, we have the management of Happiest Mind joining in. Venkatraman Narayanan, who's the managing director and CFO of the company, is with us. Mr. Narayanan, good morning and thanks a lot for joining in. So, EPAM has raised alarm bells, right? Both in terms of spending as well as demand in the tech sector. But in your assessment, how has demand been? Have you seen any deferral of orders, any cancellations up until now? And is that a legitimate fear?
Sonia. Because on the show, starting with EPAM, I think they started with a forecast or a guidance of 9% growth, which has then subsequently been revised, as we saw in the news a couple of days back. And they are talking about a negative growth because they see immediate concerns within their customer set. So while Joseph, my colleague, will talk a lot more about the market, the demand, the situation within our customer set, we have not seen any cancellations. We have not seen any postponements as of now. In fact, we are having, in a couple of large deals that we signed in Q4, we are having staffing issues in terms of getting people and ramping up to the required numbers. So while that's a good problem to have, that's something that we need to solve internally. It is not showing up on our customer set having any issues. There were certain, prioritization changes and expectations in Q3 of last year, which did overflow into Q4. We had some certain amount of those revenues right shifting into the current year. Taking in all of that into consideration and looking at our customer set, we had said we'll do 25% growth in the current year as well. And that's the kind of guidance that we have given as of now. And we are not changing it. And we are holding on to that, while holding on to the EBITDA guidance of 22 to 24%.
All right, so EBITDA guidance of 22 to 24% is something you're holding on to, and you're also confident of achieving the 25% revenue guidance in FY24. Got that. But can you tell us a little more about the deal signings? How many deals have you signed up until now in the month of May? What have the deal contours look like in terms of the quantum, etc.? And are there any deals that are getting pushed forward? Because that is the narrative, that we are getting to hear in the IT space, that there are no cancellations at the moment, but some of the deals are just getting deferred.
The strongest sign-up of deals in Q4 of last year. We signed 17 new logos. And as we speak, we are ramping up on many of them while also meeting the demands from our existing customers. We don't talk about what's currently being signed, because that's something that we'll talk about in the current quarter's call. But looking at 17 numbers that we have signed, deals that you sign in the quarter typically don't pay off in the quarter. It starts, you have to work, you have to bill, you have to book, you have to realize, and you have to recognize those revenues. So there is a little bit of work that has to be done. So what we are doing right now is building our the revenue numbers basis what we have signed in Q4. On top of that, you would have seen almost 92% of our business comes from repeat customer business. So that's also right now we have not seen any weakness. While in Q3 of last year we did talk about certain reprioritizations, people have come out of that, and they're talking about starting to invest. And just a general comment, if you look at all the analyst reports and the reports that are coming out right now, most companies are expecting a nice pickup in Q3 and Q4 of this year. That's the September, October, November, December, and the Jan, Feb, March quarter of the current financial year.
Venkat, hi, good morning. Prashant here. This waiting for this recession in the US has been a long game, right? and maybe, who knows, he may not show up this year.
I know.
But it's been like an endless wait. I want to just ask you about the edutech space, right, which is about 0.25% of your revenues, as we understand it. You don't now do content creation for these companies, but you help them set up platforms, etc. Now, education often comes up as one of the areas which will be disrupted because of this generative AI, new technology. Are you seeing anything? I mean, what are you hearing is what I want to know, without being very precise about what the impact is, which I'm sure you don't have a handle on right now. Is it going to be disruptive?
I have my colleague Joseph on the call. He is rightly placed to give you.
Let's Joseph, welcome to the call.
Hey, yeah.
If you heard the question,
I did hear the question.
Go on.
Sure. So if you look at, I'll first take the overall EdTech segment and what we do, and then get into ChatGPT. You're right that that the content creation part in EdTech is a little challenge right now, but we are working with customers to develop their digital platforms for the education segment. And even within this, if you look at the sub-segments, you have three broad sub-segments, right? You have the K-12, you have the higher ed, and then you have professional development, where you have corporate and upskilling, multi-skilling, and things like that. So both K-12 and professional development continue to do well. There's a lot of investment happening. And in higher ed, they're selectively investing more on adaptive learning, predictive learning, intervention, and things like that. So that's serving us well. We've had a couple of very good closures in the last 3 months in this space, including one in India, where most of us think that the EdTech segment is challenged. We had a multi-million-dollar win actually in Q4. Coming to ChatGPT, it is it can be an opportunity and a threat for this segment, right? Because a lot of this is content-driven. And what ChatGPT does is, it gives you easy access to content and sort of curates the content for you. And unless the edtech companies, make sure that they protect their content well, it could be a risk. Otherwise, they can use ChatGPT to actually enable and add a lot of value. And therefore, I think it offers a lot of exciting opportunities as well. We are working with a few customers on initial concepts and POCs as we speak.
Okay, got that. Venkat, just to come back to you, your 1,400 crore QIP, the board and shareholder approvals are valid till October of 2023, I understand.
That's right.
Do you plan to exercise this? Are you looking to raise money in this period, 4 months?
Yes, there are 2 points I would like to make with regard to that number. You did talk about 1,400 crore QIP. That was an outer limit that we had placed out there when we took the enabling resolution. We are currently looking to close that. But, markets have been, it's essentially dependent on markets, and pricing is also market dependent because it's formula driven. So there is there is some bit of work that's happening, and hopefully we'll have some closure on that.
Okay, just before we let you folks go, we also have Dipan Mehta of Elixir Equities, who is on the show with us, and he's been a long time observer and investor of your stock. So Dipan, over to you. Any questions that you have for the team?
Yeah, thank you, Sonia. First of all, thank you very much. I think investors like us who have been through the IPO with you have got a very good return on our investment. My question is more of macro in nature, and I've been tracking the IT industry for more than 2.5 decades. But I have not seen this kind of confidence and earnings momentum and this kind of a difference between large cap and mid cap growth rates. So what is going right for mid cap software companies such as yourself? Is it better acceptance from the Fortune 500 companies, skill sets, right selection of vertical? What has gone right for mid cap that now they're able to grow at high teens, kind of at least half a dozen companies, high teens type of growth rates, where the large cap IT is struggling to even get a single digit type of growth rate? So what has gone right for you guys?
So I would say, Dipen, thanks, and good to have you as one of the shareholders. We love all our shareholders. If you look at the mid cap and the large companies, and there are 2-3 things that are happening, and especially if I look at it from point of view of happiest minds. The first one is, just given the current economic environment, I think some of the large deals that you would typically see customers are sort of going slow on that, and they're looking more at the small to mid-sized deals, which is what we typically would look for. And because there is work that needs to be done, and when people say that, I keep hearing about between discretionary spending and digital is not discretionary, right? Customers need to continue on their digital journey. They need to continue making investments, but they're taking a step-by-step approach, and that really plays well to the mid-sized players. And if you look at Happiest Minds, playing mostly, being a 96% digital company, it really positions us well for all the digital investment and initiatives that many of these companies are planning. And again, if you look at some of the newer technologies that we've invested in, whether it's blockchain, or now looking at ChatGPT, AI, which most of our customers are implementing, and again capturing customer data and doing whether it's recommendation or doing other types of analytics. All of these are things that customers need to continue doing, and that's what I think positions companies like Happiest Minds better in the current environment.
You got a set of happy shareholders, Deepan included. Joseph, Venkat, thank you very much for joining us. It's a great conversation as always. Sorry to rush you guys, but just hitting market opening, but would love to continue this chat. Very interesting to hear insights from both of you. Thanks very much. And thanks, Deepan, for that question. We'll take a very quick break here. We'll just come back and we've got about 7 minutes to go for the pre-open session. We're right back with our technical trades. Sudarshan Sukhani and Kush Bora will be with us for that in just a bit.